Hello everyone, I'm Brian Rezny, Chief Investment Officer at Rezny Wealth Management, and welcome to this week's Market Update. Today we're diving into the latest developments in the investment markets, the economy, and why active money management is critical for your long-term retirement security. Let's get started. Over the last few days, the stock market has been flirting with record highs despite some choppy trading. On Monday, June 23, 2025, the S&P 500 rallied modestly, driven by optimism about potential Federal Reserve interest rate cuts as early as July. This optimism offset concerns about escalating geopolitical tensions in the Middle East, particularly following U.S. strikes on Iranian nuclear sites, and Iran's response with a missile attack on a U.S. airbase in Qatar. While oil prices initially spiked, they pulled back sharply by Monday, with Brent crude dropping 7.5% to $69.82 per barrel. The Dow Jones Industrial Average, S&P 500, and NASDAQ all posted gains, with advancing issues outnumbering decliners on the NYSE by a 1.67 to 1 ratio. However, the S&P 500 remains about 2.7% below its February high, suggesting the market is taking a breather as investors digest geopolitical risks and economic data. Interest rates are a key driver right now. The Federal Reserve held its target rate steady at 4.25% to 4.5% last week, as expected, but signaled two potential rate cuts in 2025. Fed Chairman Jerome Powell emphasized a cautious approach, citing a solid U.S. economy but rising inflation risks from President Trump's tariff policies. Core inflation projections for 2025 rose to 3.1% from 2.8%, and economic growth forecasts dipped to 1.4% from 1.7%. Low interest rates continue to make stocks attractive compared to bonds, but the threat of tariff-driven inflation could complicate the Fed's plans. This is where active money management comes in. Markets are volatile, and shifts in monetary policy or global events can change the outlook overnight. Staying on top of these developments helps us adjust your portfolio to protect gains and seize opportunities. Geopolitical events are adding complexity. The Middle East conflict, including U.S. Iran tensions, has kept markets on edge. While equities have remained relatively stable, oil and gold prices have been volatile, reflecting fears of supply disruptions. Historically, markets tend to recover from geopolitical shocks, an average gain of 14% 2 years after major crises. But short-term turbulence can impact specific sectors like energy or defense, which have seen gains recently. At Rezny Wealth, we actively monitor these events to ensure your investments are positioned to weather volatility and capitalize on emerging trends. Now let's talk about U.S. businesses, the backbone of the market. Corporate earnings remain a bright spot. Recent data shows strong earnings releases, stable hiring, and robust consumer spending, with high-frequency indicators like credit card swipes and restaurant bookings holding firm. However, not all sectors are thriving. For example, Dollar Tree dropped 8% after forecasting a potential 50% profit decline due to tariff-related costs. Meanwhile, tech giants like NVIDIA and firms in AI and hybrid cloud, like Hewlett-Packard Enterprise, beat expectations, driving market gains. This divergence underscores why active management is essential. By closely tracking company performance, we can overweight sectors with strong growth, like technology, and underweight those facing headwinds, ensuring your portfolio aligns with the market's strongest opportunities. Why does all this matter for your retirement? Because long-term security depends on staying ahead of the curve. Markets don't move in a straight line. Geopolitical risks, interest rate shifts, and corporate performance all create challenges and opportunities. Passive investing might work in a bull market, but when volatility spikes, active management helps protect your wealth and keep you on track. At Rezny Wealth Management, we're not just watching the news, we're analyzing it, adjusting your portfolio, and keeping your goals front and center, whether it's reallocating to defensive sectors during geopolitical flare-ups or capitalizing on growth in AI-driven industries. Our hands-on approach is designed to build and preserve your wealth. That's it for this week's update. Stay informed, stay invested, and let's build your retirement security together. If you enjoyed this video, forward it to your family and friends so they can get the same high-quality education you receive. I'll see you next week.